Hello everyone, my name is Kanika Jindal and welcome to my channel IGyaanguru. Today in this lecture video, we will be discussing about IFRS. So let's start. First is the introduction. IFRS or International Financial Reporting Standards consist of a set of accounting rules that determine how transactions and other accounting events are required to be reported in financial statements. So it is a single set of global standards and more than 100 countries are have permitted or require IFRS for public companies exceeding a specified net worth. They are designed to maintain credibility and transparency in the financial world, which enables investors and business operators to make informed financial decisions. So they'll be able to make informed financial decisions because they'll be able to clearly compare the financial statements of various entities over the globe. IFRS standards are issued and maintained by the International Accounting Standard Board, which is a not-for-profit organization, and were created to establish a common language so that financial statements can easily be interpreted from company to company and country to country across the globe. Next is features of IFRS. So first is principle based. International financial reporting standards are based on clearly stated principles. Therefore, they are known as principle based accounting standards and not rule based accounting standards. Next is substance over form. International financial reporting standards emphasize that transactions should be recorded on the basis of their economic reality and not on the basis of their legal form. For example, if an asset is purchased on hire purchase, it is shown as an asset in the books of the hire purchaser, even though he'll become the owner after paying all the installments. Next is fair values. So IFRS focus on accounting at fair values instead of historical cost. Next is the functional currency. Under IFRS, all the assets, liabilities, revenues and expenses are reported in the functional currency instead of the local currency. Next is reassessment of useful life and depreciation. Under International Financial Reporting Standards, the useful life and depreciation of property, plant and equipment needs to be reassessed annually at the end of each financial year. Next is need for IFRS. So first is financial globalization. So financial globalization has increased over the years, and diversity in international accounting practices adversely affects the capital flows. Therefore, there is a need for a single set of high quality international accounting standards which will promote confidence in capital markets, uniformity of accounting standards, and comparability of financial statements. Next is multinational corporations. So basically MNCs are the greatest beneficiaries of IFRS because diversity in accounting standards in different countries led to a tremendous drain on their resources, and the preparation of consolidated financial statements would be greatly simplified with the use of IFRS, which are the global accounting standards. Further, the cost of preparing financial statements on the uniform basis would be less. Next is internationalization of accounting. So conversions of accounting practices would foster the internationalization of the accounting profession, as the difference in standards the world over will tend to narrow down, and this will make it easier for professionals in one country to carry out their profession duties in other countries at ease. Next, we have IFRS standards list. So there are total 17 international financial reporting standards. There is a list on the screen. For IFRS 1 is the first time adoption of international financial reporting standards. IFRS 2 is based on share-based payment. IFRS 3 is about business combinations. IFRS 4 is about insurance contracts. IFRS 5 is non-current assets held for sale and discontinued operations. IFRS 6 is exploration for and evaluation of mineral resources. IFRS 7 is financial instruments disclosure. IFRS 8 is operating segments. IFRS 9 is financial instruments. IFRS 10 consolidated financial statements. IFRS 11 is joint arrangements. IFRS 12 is disclosure of interest in other entities. IFRS 13 is fair value measurement. IFRS 14 is regulatory deferral accounts. IFRS 15 is revenue from contracts with customers. IFRS 16 is leases, and in the end IFRS 17 is about the insurance contract. So these are the list of IFRS which was given by International Accounting Standard Board. That was all about International Financial Reporting Standards. Thank you so much and have a nice day.